We are officially halfway done with 2024 and a lot has happened already. But as far as the market goes, it has been on a positive trajectory so far. So hopefully that's good news for you guys' portfolios. And in this video, I'm gonna go over all things my dividend portfolio, including its overall performance, the companies that paid me last month, how much I've made so far, and the goals that I have for the following month. But before we get started, make sure you leave a comment below on how your portfolio did for the past month, even for the past 6 months, and what your goals are for the next month and the next 6 months. June ended a little rocky for me, especially after the small sell-off that Nvidia had after their 10-to-1 share split, which is important to me because as far as unrealized profits goes, Nvidia holds the majority of my money. But regardless, my portfolio did perform pretty well, increasing by 4.2% over the month of June. For year to date, it's gone up by over 20%, which again, I can probably attest to Nvidia and their insane almost 200 or maybe 150% growth, and I'm at 39% growth all time. Numbers aren't too bad so far, and hopefully it's something I can continue for the rest of the year. Next thing we have to talk about are the dividend checks that I received for the month of June, starting with a little over $5 from Target, which happened to be the biggest check I received, which is always cool. Aside from Target, I received $2.35 from ExxonMobil, 63 cents from DIV, 99 cents from Microsoft, $2.29 from Home Depot, 91 cents from Hershey, $2.16 from Realty Income, $1.24 from Main Street Capital, $1.06 from the Semiconductor ETF, 70 cents from Stag Industrial, $1.69 from McDonald's, $1.56 from Main Street Capital, which I believe is their special dividend, so that's really cool, 25 cents from Nvidia, $1.27 from Digital Realty Trust, and 85 cents from SPHD. Altogether, I was paid $22.96 in June from 15 different companies, putting me at a current annual total of $154.77. That also has me at a current average of $25.80 per month for the first 6 months. If I compare this to last year, I was paid about 63 cents more this June than June of last year, a little over $33 altogether for the first 6 months of this year in comparison to last year, and my average so far is $4 or $5 more this year than it was last year. I was a little curious on the fact that my dividend income for this June was less than $1 than it was for last June, and I know one reason is that SCHD, which normally pays a dividend in June, actually decided to pay its dividend in July, which would have added $4 for me, so that makes sense. And regardless, it's stats that I can definitely appreciate. I haven't really sold any positions recently, but I did sell 2 shares of Leggett and Platt, which was my entire position worth at that point only about $25. The problem with buying and holding positions for the sole fact that somebody else told you to is that you may forget you have them and you don't fully understand what the company does. And that was the issue with me and Leggett and Platt. And it took me up to this point to realize that this stock had dropped by over 50% within the past 6 months. So I decided to look more into it. And one thing I learned is that their quarterly shares declined on top of a 10% revenue decline year over year. And also high interest rates are something that affected this company. Leggett & Platt designs, manufactures, and sells engineered components and products in the US and internationally, including housing products. So with the housing market down, the need for furniture, flooring, and textile products goes down as well. Again, how high interest rates ties to this company. And adding to all this, the one major headlining news that this company had was that it slashed its dividend. It initially paid about 46 cents and dropped it to 5 cents per share. This is definitely not a good look for a company that was known as one of the few dividend kings out there, consistently increasing its dividend payout for the past 51 years. Of course, a dividend cut could mean that it could be beneficial for the company in the long term, but I think for people that really trusted consistent payouts for this company, it may kind of leave a bad taste in their mouth. So that's why I decided to sell out of that one. Even though I did take a loss after selling Leggett & Platt, I did use some of that money on top of the $30 per week that I invest every single week into my portfolio to add on to 2 existing stocks within my portfolio. The first one was McDonald's, which I added just about half a share. I wanted to take advantage of its discounted share price, and price inflation seems to be the biggest impact when it comes to the share price being traded at near 52-week lows. But they're working on reversing that, starting with making a $5 meal deal, which should definitely help. I also added 0.15 shares of Hershey, which is also at a 52-week low. When I took a look at this company, it looked like the price of cocoa was the main issue, which is constantly increasing at this point, and I'm hoping that's a temporary setback for a stock that's consistently increased its dividend payout for the past 55 years. Being a small investor consistently over a long period of time can still make a really big impact on your portfolio, and that's one of the reasons I like looking into seeing what my future projections could be when it comes to how much I can make in dividends, assuming I stopped investing and only relied on drip to reinvest back into my portfolio. If I stopped investing right now, my portfolio would pay me $360 within a year, $504 in the next 5 years, and $752 in the next 10 years in passive income. This will continue to increase as I continue to invest my $30 a week every single week, which is really cool. And hopefully by the end of the year, I can budget myself to be able to afford to invest $50 a week. Increasing my weekly investment is a long-term goal, but what's just as important, if not more, is making sure that I'm not investing into positions that have a negative dividend payout history or a dividend growth history. That's going to be something that's going to make my $30 or $50 a week work as hard as it can. So the most important thing for me right now is to make sure that even my top dividend paying stocks are stocks that have a positive history of paying and increasing its payout. I actually do talk about my top 5 dividend payouts in this video, so if you're curious, make sure you check it out. I appreciate you guys checking out this video, and until next time, as always, take care.